Welcome to Daily Recap. Today is Friday, December 7th, 2018. Take two. The first one didn't go too well, so we redo it. This is going to be a special edition, all zombie edition. So too bad this is not Halloween, but dude, man, the zombie thing is catching on, and we've started to implement actually trading strategies around it. Hopefully still continue working. One thing in trading you gotta realize is this: nothing lasts forever. There's certain patterns and certain trends, and then once everybody knows it, it's over. So you have to always got to be adaptive. You always have to adapt to what's new out there. So now, it used to be a 3-day rule, easy, boom, third day, shit tanks on at the open. Now, you know what happens? They don't fucking tank it intraday. They gap it down. So now on the second day into the third day, maybe you have to hold it. Just like Joe. Joe did well. Joe Kelly held AETI overnight on day 2. And day 3, fucking no one got a chance to go in because it gapped down 25 cents and went down another 20 cents. So let's take a look at that just to show you. So, this is a sort of new thing you have to understand. Is like nothing lasts forever, guys. You get these cool patterns and you take advantage of it as long as you can, right? And then someone else is going to fucking do it and ruin it for you. And algos going to step up. They get smarter too, guys. The guys that are running the scams are getting smarter too. So look, this is AETI. First day, boom, boom. And then boom. See, they're getting smarter now. So before it was simple. If it gapped down, it's dead. The play is dead. Now they're trapping. And so the zombie is a new thing. Okay? So for just a couple of years now, they started zombie these things where they just fucking wait and they just fucking trap you. Before, it was very simple, man. It's like stocks ran very simple. Now the algos got more sophisticated and all this stuff. So look like ATEI. It's a hell of a trader, dude. Hell as in not a good trader. It's like very difficult for the retail guy. Look at this. It run up, and you think it's going to keep going. Boom, they slam it down. So you thought it was dead. Death candle, death candle. Next day you hold. You think you're chill. You're adding to a winner. Boom, you just got zombied, and you're dead. And then what happens? Day 3, I'm like, okay, I'm going to kill this on day 3. I'm waiting, and it gaps down. Fucking no play, dude, because you're scared to hold this shit overnight. So the first night, it closes low. And it gets lower, and then it zombies you. And then the second time, you're expecting maybe close low again, and you're short, and it squeezes you at the end of the day. So what do? How can you fucking hold this shit? It could fucking gap up to $2. Low floater. So you don't fucking, so you're waiting for it, and you hope it stays, and then you wake up the next morning, it goes from 150 something to 130. You're like, fuck, you missed it. Oops, I can't use that word, but okay. So you see what I'm saying? So these patterns are getting more and more difficult. And look at that. Now it just keeps going lower. 108. What the heck? You think about it, I just hold it on day 1, I make money. But how can you hold it? How can you hold it, right? And so some of these plays like this, guys, it's too hard. You don't have to be in every single one of these plays. I've actually lost money on this stock. The moment I gave up, it went in my favor. I played really small yesterday. I made money from 133 down to something here. But it was nothing significant. I kind of blew my mental load. Ripping it, they're trying to short on day 2. So I lost on day 2, and I basically did not hold overnight and went down. So it's just kind of like, so you move on. So I stopped looking at it, and so what happens? I wake up, and then, dude, all these other stocks come. APHA, APHA came, and TNX, right? And so let's take a look at what we did. So before we get into the zombie, let me just go through the AF. This was a trade we did yesterday, guys. This was a trade we did yesterday. So what did I do on this chart? So yesterday we noticed a bounce off the $4 line. So I actually saw it at 430. It hit this trend line. So this green, you can't really see it. It says $4.33. This green line here. So once it broke that pivot line, it started moonshot to the $5 line. So remember I said, I always go from line to line. And what is a line? A line is purely a resistance or a support line. Another word is so there's a technical term called a pivot line. There's an algorithm, a formula that you can calculate exact prices. And we have guys like Joe that figure out how to put it onto your DOS Trader DOS Pro platform. I don't know we got in Sterling yet, but there's also one in Thinkorswim, TOS. So take a look at it. You can go online and do more. Stockcharts.com is another place that you can look at. So basically, it's the simplest, the most fundamental technical analysis is the resistance lines. Okay, it's basically I call it the lines to make it simple. There's a bunch of different lines, right? There's resistance lines, there's support lines, there's pivot lines. I just call it the whole family of lines, and those are basically technical analysis. It's based upon the history of data, probability, statistics, mathematical models, all that stuff. Okay, you can Google all that stuff. So I mean, you can have all sorts of indicators. You can have like Fibonacci, these bands, all these complicated PhD stuff, okay? But I'm just gonna teach you guys the most simplest way to do it. And in my opinion, it covers most of it, okay? If you wanna get more dirty, that's awesome. You can go back and fucking and add more indicators you want. But I'm gonna show you the simplest thing and then you can add your own, okay? And these are just lines. It happens that these are pivot lines that are drawn in automatically by the system. So you have a platform. This is Realtic. We don't have to use Realtic. Realtic's really expensive. It's like $500 a month. But it's available for you in DOS Trader Pro, a part of our preferred brokers. So both of them have it. So take advantage of that. So these are drawn and you can add it to your own charts, okay? Remember, this is just what the program puts in. You as the interpreter, the operator, needs to understand what these lines mean, okay? Just because it hits these lines doesn't mean it's the Bible. Doesn't mean it's like physics, law. These are not laws. These are just, I would call them areas of interest, okay? It means when it hits that area, when it hits that line, it becomes an area of interest. Now, if it hits that line, you have to determine for yourself, is it a buy or a sell or do nothing? I'll call it indeterminate, meaning a coin toss. So a lot of the times what I call it inside lines is indeterminate. So $4.33. I mean, it could be a trigger for a buy, right? Because on the way up. In hindsight, it's very simple to call this. But at that time, you don't really know. So for me, it was indeterminate. Because it could have been a resistance or a breakout. You see what I'm saying? It broke it, it breaks out to the next line. So I always say go from line to line. It's as simple as that. So everything in between the lines, I call that noise, just a void. And so 433 is kind of weird. Like you wouldn't see this on your own unless you have a program that draws it in, or you expand this chart out big time. And you see how the program draws it in. Okay, you can do this yourself, guys. Expand this to full screen. Take a horizontal line and draw across. Look at this. It lined up this point right here from the previous day. And just drew a line across. And that's how they got 433. Simple as that, man. Eyeballing this shit, dude. So when you look at this shit, just eyeball it. So boom, here's a line. Another line up here. How they find this line? It's actually $5, man. But they drew it $4.96. Because they didn't get quite to $5. But the human being has a $5 line. Okay, so there's a bunch of different resistances. Okay, there's technical resistance numbers generated like programmatically, mathematically, formula based, and then there's mental human resistance. A human don't go 496. Who the hell, like what grandma comes in and go, I want to sell this sucker at 496. You know, they're usually selling at whole numbers, right? $5, $4.50, $5.25. Things that, in my opinion, numbers that match up to the coins in your pocket, because that's what you people normally use, right? And so that's how these, I call them mental lines come, okay? So $5 is a mental resistance. It happens to coincide with also the technical lines. Why? Because if enough people use that line, it becomes a line. It becomes, you know what I'm saying? So it's a self-fulfilling prophecy. That's how a lot of these things work. it becomes a self-fulfilling prophecy. If everybody's on it and everybody's making a trade off of that line, that area of interest, that means all the prints are going to go there. So the volume, look at TNX, guys. I have no order on this. I would be a short around the 450 line if I had a short. If you want to take if you want to do this, it's at your own risk. I am not in this. I have not entered since I sold this sucker at $5. I said there's one bounce, and it bounced right here what I was setting up for the daily recap. Remember I said there's one bounce to 450. That's it. First it dies. So we're talking about this, but we're talking about how we got to technical resistance. We will go on to this in detail, okay? So don't worry. So technical analysis is mathematical based upon all the prints that happened in the past, right? And I call it the self-fulfilling prophecy. It's because if everybody's selling at this mythical mental $5 line, or they're buying it, it becomes an area of interest. Even though mathematically it's not there, but it's a self-fulfilling prophecy. If everybody does it, then of course it's going to be a resistance support there. And so the programs make it easier to see. For those inexperienced, what I would suggest is this. Dude, keep looking at all these plays every single day that are in play, guys. You don't have to trade them. The more of these you look at, the more the lines make sense to you. The more you see these lines in your sleep. Everywhere I go, I see these lines. I'm working out at the gym. I see all this stuff. I'm staring at, my calorie count, whatever. You see lines everywhere. And so you start drawing horizontal lines across. You can eyeball it, dude. So this is how we trade. Me and Alex have been trading. I wake up, what are the stocks in play? What are the lines? This is as simple as that. And so everything in between the lines, it's noise. So we don't even touch it until the lines. If you go early, that's what's called FOMO, fear of missing out. And that's what you lose. So it's up to you to see which line, which areas of interest works. And the only way you can do that is experience, guys. I still do not know for 100% which one it is. If I did, I put my entire account into that area of interest. But you can't. I scale around because you really don't know. You don't know. Whoever says they know, they don't fucking know. If they are, they should be a billionaire, okay? They can guess all they want, but there's so much. It's like because of the fact that there's like so many people interacting with this stuff, guys. If it's just one person in a vacuum ecosystem, then maybe they can predict it, right? But who's gonna know some jerk guy 25th, like a chat room just starts coming in and banging this? You know what I'm saying? Just stuff like that. It's just too many unpredictable variables. So the only thing we could do is just play safe around the areas of interest, and I call them the outside lines. So right now, you know what this is? So right now it's 617 and 650. The outside line might be 680, 650. So if you really want to play safe, it may never even hit. It hit one time because of Citron pump. 659 hit. I waited all day for 650. It didn't hit. It hit because what? Some anomaly happened. Citron pumped it. If you predicted that bullshit, without Citron coming, this sucker was about to die. Then all of a sudden at $6, Citron pumped it. Boom, because I just covered at $4.99. And then Citron came in, not $4.99, $5.99. And Citron comes in and pumps it to $6.50. So, so you can't predict. So that was an example of like some anomaly that came into the market. So the only thing you could do is like play with the lines and see the rules and just be experienced at it. So let's finish the alpha. So let me show you what I did. So,